As we've traditionally done, I will start with going through the operations, and then Tinei, who's our group CFO, will come and cover the numbers. Our business is very seasonal, so the first 6 months of the year are always very limited trading months. We do sell in East Africa, where they have got different seasons, where they've got 2 seasons. So we start selling there. But in some of the bigger markets like Zambia and Malawi, they only start selling now when the rains have come through. So this is when we are starting to see the business picking up. Just looking at what we are seeing in the environment, so on the technology, it's very much becoming an AI-dominated environment. And us, from a group perspective, we're also trying to take advantage of all these new tools in terms of our breeding. And the hope is we can now start quickening our product release and bring new products to the market as quickly as possible. We're also trying to make sure that our farmers are exposed to the latest technologies, and hopefully we help them increase their yield that way. In terms of governance and political climate, so obviously in the markets that we operate in, the Trump 2 policies are very much topical. We've seen how Mr. Trump has cut aid through USAID and some of these agencies, and some of our markets are very much dependent on that aid. So we are seeing operations in those markets experiencing the challenges that then do arise from the withdrawal of that funding. We're also seeing increasing exchange controls in markets due to forex shortages. And we're seeing increasing conflicts in some of our markets. So in Ethiopia, in Nigeria, particularly of late, it has actually escalated. But in some of the markets, things have gotten quieter. You remember that last year we lost a wholesaling season in Mozambique because of the uprisings after the elections. This year we've been able to have a normal season. We're seeing quite a lot of liquidity squeeze in most markets and currency volatility. The US dollar has indeed strengthened compared to most currencies that we trade in, and that obviously has an effect on our income statement. On the climate side, there are very good signs there. The scientists are predicting very good rains in our key markets, particularly in Southern Africa. And we've actually started to see these key rains coming. And this obviously is expected to push sales quite significantly. On the regulation side, we always are worried about weak regulations, particularly to do with fake seed. So there are many people that are buying grain and just painting it in our colors and selling it as seed, and that has an effect on our brand, but also on the farmers' yields when they are sold something that is not seed, but is packaged in a seed bag. These fake seeds are not just on seedco varieties, they are also being done for other competitor varieties. So it's an industry-wide problem that we are noticing. We also see a lot of increasing competition. So most of the big seed companies in the world are coming through. And competition is always good because it forces you to up your game. But obviously the cake is not growing as fast as we would want it to be. So you start having challenges in terms of some people coming to compete on the basis of prices and so on, and that can end up squeezing the margins. So that's it on the environment. That's what we're seeing on the environment. Just looking at our R&D, the key issue is when you look at our operations over the last 6 months, we've actually released a number of new products. So we released 2 soybean varieties and 3 wheat varieties. And we've also released 18 maize hybrid varieties. And the whole idea is to come up with varieties that respond to the challenges that our farmers are facing, and our product basket continues widening. All those are the varieties that we did release in a number of markets, and you can see that those varieties were released in Kenya, in Malawi, in Nigeria, in Zimbabwe, so covering a broad range of countries. On the supply chain side, this year, we've actually been able to achieve 87% of what we had planned to produce, which is a very good outturn, because we also always have carry-over stocks to cover any gaps that we might have. We've been busy capacitating our processing, and particularly the projects that we are doing in East Africa and in Zambia in terms of increasing processing capacity are nearing completion. The Tanzanian Kisongo project, where we are building a new factory and warehouse, we expect to officially open that facility in March this coming year. And then we also are onboarding new growers, bigger growers, who've got capacity to produce at our levels and achieving the yields that will lead to us reducing our cost of goods sold. Challenges always relate by and large to climate. Last year, so we had delayed rains, and in fact, those delayed rains ended up affecting our dry down because it took longer to dry down seed. And when seed takes long to dry down, it means you are going to take it to the market a bit late. And that's always a big, big challenge that we face in our kind of industry. Right now, what are we focusing on? Making sure that we produce enough for the coming year. We've signed up adequate growers. We've also capacitated our growers in terms of irrigation facilities and dryers. In some of the markets, we're introducing color sorting technology so that we reduce the time that we take because we have been using hand-picking methodologies in the past. But with these mechanized color sorting technologies, we should be able to complete our processing activities quickly and take the product to the market as early as possible. Like I said, that completion of the Kisongo project in Tanzania and the Kachiza redevelopment in Zambia, key activities that we are working on. Just in terms of sales and marketing, when you look at our volumes, Tine will cover the numbers just now, but we are roughly 7% below where we were this time in prior year, and that was largely because of the delayed dry down that I explained. We couldn't take the products to the market as quickly as we would have wanted to, but we are now seeing these markets catching up, and we believe by year end we will have caught up in all the markets that we are lagging behind at the moment. Again, like I said, the first half is always a cost accumulation period. We bring in product to the factory, and now when the rains come in the big markets and we start selling, this is the busy period for the business. So things are now really happening, and of course the results will be reported at year end. With those few remarks, I'll ask Tine to come and cover the numbers, then I'll come and talk about the outlook. Thank you.
Thank you, Morgan. Good afternoon, ladies and gentlemen. So we'll take you through the numbers in a little bit detail, starting with the highlights of the key metrics. You will notice that we registered a significant improvement compared to the same period prior, save for volume, which is 7% below prior, And from the earlier presentation by Morgan, you notice that the flagship crop, which is maize, which contributes the bulk of our business, actually registered a 4% growth. The drop was in soya and other crops. In other crops, we do have commodities, that is seed that we have failed, and then we dispose of it as commodities. So that reduction is indicative of the quality of products that we had this year when you see there's a reduction in other crops. I must also highlight that for the consolidation of these numbers, we do have Malawi, which is currently in hyperinflation, and at a local level, that admission is not yet there by the local authorities, but from a technical point of view, from an accounting side of things, Malawi is designated as a hyperinflation market. And for the purpose of these half-year numbers, we did hyperinflate the performance of Malawi. We also used a very conservative exchange rate to translate the Kwacha numbers to USD of about 3,850, whereas the official exchange rate is around 1,700. And come year end, we do not believe that the translation rate would be at the level that we use for the purpose of the half-year numbers. But as you are aware, the accountants in the room, IS 21 allows us to come up with an estimated exchange rate in a market where there's a lack of exchangeability at the official exchange rate. But we believe at this stage the 3,850 exchange rate that we use is still very, very high and very conservative. But overall, at a group level, we did register a turnover growth of 15% from 40 million to 46 million. This is despite the 7% volume drop, and that growth is largely coming from a product mix, with maize being the dominant product there, as well as value tracking pricing, especially in markets where currencies are depreciating. We also achieved a better gross profit margin of about 49% compared to 47% prior same period, and this is largely coming from the product mix where maize continues to dominate the business. From an operating expenses level, we achieved a saving of about 9% compared to the same period prior year, and this was mainly coming from cost optimization as well as better credit risk management. I think for those that have been following our results last year, and we did book a significant provision in terms of credit loss, and we do not believe that will recur this year because of the measures and policies that we are putting in place to manage credit better. The other loss that we have in this first half is mainly coming from the FX loss in Malawi because of the exchange rate that we use, as well as the impact of applying IS 29 in that market. At an operating profit level, the result more than doubled what we achieved same period prior year. This is coming from the revenue growth, the optimization in operating expenses, and the improvement in the gross profit margin. We are also doing well in terms of how we are managing our treasury. We've been able to move funds across markets to reduce our level of borrowings at a group level, and because of that, we did achieve a net saving in finance cost of about 800,000, and this is a significant saving that we are anticipating that it will flow through to year end, because at this stage we are no longer borrowed in most of the markets that we operate in. Out of Zambia, we paid off all our local borrowings. At a group level, here in Botswana, where we raise most of our funding, we are also aggressively trying to reduce the level of our borrowings. So the first half, at a profit before tax line, turned out a profit of about 800,000 compared to 2.4 million in the same period last year. And this is coming through from the performance that is coming out of Tanzania, as well as Malawi, despite us using that very conservative exchange rate to translate these numbers. As we speak, we are sold out of seed in Malawi, and we are having to move seed from other markets to try and satisfy the demand that is coming out of Malawi. And most of that trading is on cash terms. So because of all that, our bottom line improved significantly to almost break even, compared to 2.8 million loss same period last year. And the same trend is also showing in our earnings per share. Looking at the cash flow, this is building up from the performance out of the profit and loss, the cash management and active treasury management that we are implementing. You will notice that at an operating cash flow level, there's been a significant reduction in what we invested out, 1.7 million compared to 9.9 million prior year. We've been able to collect most of what we owed when we closed the last period, last financial year. 75% of the data that we closed with in March have been collected. So that is translating to the improved cash flow position, mainly driven by the profitability, better working capital and collections. From an investing perspective, there's a reduction in what we have put out in terms of the capital projects that we are running in the region, with the Tanzania project almost coming to completion. So that means the level of deployment of cash is also coming down. I've spoken about the initiatives that we are putting in place to manage credit risk and to also make sure that we are collecting, and because of that, we borrowed less in the first half compared to what we did last year. That is about 6.4 million net increase in borrowings compared to 8.4 million same period last year. This being the first half year, as Morgan has said, it's a cost accumulation period. We are investing in working capital, so the overall net position will still be negative, but it's a significant reduction in terms of the net cash outflow compared to same period prior year. You're looking at 1.6 million when at the same time last year we pumped out on a net basis nearly 9 million. Our balance in terms of cash position is also significantly better than the position we closed at last September, 12.6 million last year, and this period just under 15 million. Moving on to the balance sheet, some improvement, 8% in total assets to 169 million compared to 156 million last year, and this is anchored by the capital projects that we are carrying out in the region, more than offsetting the depreciation for the period. some increase in inventories as we recover production, and also increase in receivables because of the increased trading activities in the first half compared to the same period last year. Like I mentioned earlier, we have collected 75% of what we owed when we closed the year in March, and that's about 38 million in collections. From a property, plant and equipment level, there's some stability there, obviously anchored by the capital projects that we are doing in Tanzania as well as in Zambia, offsetting some translation losses coming out of Malawi. Compared to where we were in March, the softening of the cash position from 17.3 million to about 15 million, because in this period, it's a period where we are taking seed from our growers, processing it before placing it on the market. So it's a cash consumptive period in preparation of the selling season. From a shareholders' funds perspective, almost stable, despite us paying out a dividend of about 2.8 million, which was more than double what we paid last financial year. And that is indicative of the cash generation improvement that we are seeing in the business, because we did not borrow much, but we also managed to pay a higher dividend this year. I'll end here and call back Morgan to speak to the outlook.
So just looking at the outlook, being in agriculture, one major determinant of how we end up faring is the weather. And the good thing is consistently, the whole of this year, the weather predictions have been very good for our markets. So the forecasters are expecting normal to above normal rains in our key markets, in Zambia, in Malawi, in Zimbabwe, in Mozambique. And then they are forecasting reduced rains in East Africa. Now, those improved rains, we are already seeing them, and they should be able to underpin very strong performance. We are actually seeing volumes going up in all these markets, and in some markets, we are actually starting to run out of popular varieties. The effect of this weather should translate to very good numbers come year end. What also becomes very important is varietal placement, making sure that we place the appropriate varieties that are suitable for the rain that is forecast in the different markets. The good rains are also going to be very good in terms of our production planning. We are expecting to achieve our production. Our growers have already started planting, and this coming year we should have adequate product. However, in East Africa, we may have the low rains that are anticipated there, dampening sales, particularly in Kenya. In Tanzania, we haven't seen that negative trend. We've actually seen strategic varieties, the demand going up significantly despite the expected rainfall gap. And we think we should still record very good numbers. In terms of the macroeconomy, so what we are seeing in most of the markets, Zambia positive, Tanzania positive growth, although recently they had those disturbances that they had after the elections. But however, the underlying economy itself remains very stable. The currencies have been reacting favorably, and that is good for our business. All these governments also do participate with some government input programs, and we are seeing some very good contribution from those sectors. In Malawi, we're seeing high inflation and forex shortages, but the demand remains very, very high. The challenge is to make sure that we hedge ourselves in terms of what's happening on the foreign currency front. We were there a few weeks ago, and they were deeply engaged in discussions with IMF to see how they can sort out the economy. But for our business, because of the stock situation there, what has been pleasing is that all the sales that we've done this year and that we continue to do are on a cash basis, and people are prepaying, and as soon as seed is delivered to the warehouse, they are coming up to pick up their seed. The queues remain very long, and we should be able to sell out everything that is earmarked for that market. In Malawi, in Kenya, while the growth is projected at around 5.2%, the weather issues that have been predicted for East Africa, we are seeing them influence demand in the Kenyan space. But however, like I said, in Tanzania, the numbers are looking very good. In the other markets, DRC, Mozambique, Ethiopia, and Nigeria, political stability remains a key issue. In some of the markets, a little bit difficult to access, particularly in Nigeria. But when you balance the negatives and positives, we should generally be all right. Come year end, what are we expecting? We're expecting a very good outlook. We're expecting very improved performance compared to prior year, and this will be underpinned by our strong seed varieties that are suitable for the climatic conditions that we experience in our markets. The strong regional presence enables us to diversify in terms of risk and make sure that other markets make up for any shortfalls in other markets. Our brand is 85 years old this year. Our marketing team is revolved around celebrating those 85 years that we've been in business. It's a well-known brand on the African market. We will continue to focus on food security, and in these countries that we target, food security is a key issue. The governments continue to have some subsidized input programs in most of these markets, so they are playing a role making sure that the farmers have got adequate inputs. We have got adequate stocks to sell, so in most markets we should be able to meet demand. We are seeing continued growth in our growth polls, particularly Tanzania. The growth there has been phenomenal. But we also see growth opportunities in Ethiopia, in Angola, in the DRC, and the Lakes region in East Africa. And then because we've changed our route to market and we are using more direct channels, we're opening up our own shops in some of the markets and taking up cash sales and prepayments. That is really going to help us, particularly in terms of ECL provisions, but also in terms of cash flow generation. So overall, we expect growth this year in all metrics. We expect the bottom line to grow, and hopefully, more importantly, for the shareholders, a higher dividend. I think that's it in a nutshell. Without committing ourselves to a particular number, we expect our earnings to be significantly improved compared to prior year. The weather is playing out very favorably, and we've got adequate stocks in these markets. I'll end there and take questions. Thank you very much. Yes, madam.
Good afternoon, everyone. I'm Philo from Quarry Capital. I have about 4 questions. So with the first one, it has to do with your revenue growth. You did state that volumes overall did decline by about 7%. So just want to understand that the 15% growth, is it largely driven by just your inflationary price increases on your products? And then I think on the earlier release of your financials, there's about 7.2 million set aside for your CapEx spend. Can you elaborate further on that? The period in which you expect to spend that 7.2 million, and where is it directed to? And you did speak about having paid off your Zambia borrowings and aggressively reducing your Botswana loans. However, your borrowings went up. What are the terms of the loans and where did you take the loan? And then earlier you mentioned that there are certain economies that are dependent on US aid. How exposed is Seedco to that? And what should we expect from those economies? And please elaborate further on them. What are they? Thanks.
Okay, so I'll take the first and the last question, and then Tine can answer the second and the third. The first one was on the increase in turnover and whether it was all inflationary. I think the point that Tine did make was it was very much a factor of varietal mix. So the varieties that we sold are the higher priced varieties, the prices that add more in terms of margin. So if you look at the 7 series, we had better stocks of 7 series this year. And because those varieties, in some cases, sell at almost 50% above our normal run-of-the-mill varieties, this is what really improved our margins. You want to take the...
Yes. Yeah. You can hear me? Okay. Just to add to what you were saying is, I also mentioned that if you look at the makeup of our revenue, the biggest contributor was maize, and the maize registered where we had... Yes, where we witnessed a drop is in other crops, and these other crops are mainly OPVs. OPVs are open pollinated varieties which are traded at relatively lower margins compared to maize. So within maize, there's also a varietal mix where if we have more of the 719, which is our top selling variety, it's also a premium variety, whose availability is more this year, it explains the increase that we are seeing in revenue. Then coming back to borrowings, at cutoff when we reported the numbers, 30 September, yes, there was an increase in borrowings because that's the time when we are receiving seed, we are processing in preparation for placing it on the market. But on a net basis, we borrowed less, if you look at the cash flow statement. But subsequent to the reporting period, the cutoff 30 September, in the 2 months that have just ended, October and November, that's where we paid off all our borrowings in Zambia. And Zambia is one of our production hubs. It's actually the major market where we produce our seed that we then export to other markets. So that's where we also get to borrow more compared to other markets. We do not have any borrowings in Tanzania at the moment. We are slightly borrowed in Kenya, and we are also slightly borrowed in Malawi. We have started reducing the borrowings that sit in Central Treasury out of Botswana. And this is all happening now because we are now at the peak of our selling period. Coming to the CAPEX question, so we also try and deploy our CAPEX in line with the seasonality of our business in terms of cash flow generation so that we do not compete for cash flow with working capital. So working capital is the price because we want to be able to trade. And then this second half now where we are beginning to be cash positive in most markets, that's when we start accelerating the deployment of budgeted capital expenditure. So that, most of that is going into Tanzania, where we are putting up a new factory, as well as a business complex with a target to complete that by the end of this financial year, 31 March 2026. We should be having an official opening ceremony. We are also redeveloping a major depot in Lusaka in Zambia, Kachidza. We've just concluded the demolition of the structure that was there, and we will be reconstructing even throughout the rain season with a target completion of June 2026, well in time for that depot to be used for the next selling season.
And then in terms of the economies that are being affected by the Trump 2 policies, the main one is Malawi. So you know that Malawi does depend on foreign aid for its balance of payment support. So while that hasn't dampened demand. What we have seen it causing is remittances. When you import seed into that market, getting the money out in US dollars is a big challenge, and we are having to appeal to the various authorities there to get help with remittance of funds that are stuck in that country because of forex shortages. The business itself in terms of demand is very good, but just foreign currency becomes a big issue because of the reliance on balance of payment support. Okay, any more questions? Yes, madam.
I see on your balance sheet under assets you have investments in joint ventures. So I wanted to understand the nature of the joint ventures.
So we have two remaining joint ventures on the balance sheet. One of the major one is the vegetable seed business that we call Prime Seed International. That we own 51% in partnership with one of our major shareholders who own directly at that venture level the 49%. We also have a joint venture in West Africa, which is almost in startup phase, and I think the capital allocation in terms of the balance, which the carrying amount that's on the balance sheet is not that much. So it's about 100,000. Because of the startup nature of it. There we are trying to penetrate the Francophone West Africa with a hub based in Ghana. Any more questions?
There are no questions online, nothing from there. All right, if there are no questions, thank you very much. Like I said, so first half is always an expense accumulation period, and but the turnover is going in the right direction, and even the bottom line you can see from a negative of about 3 million last year, it's almost break even this time around. And come here and we expect the numbers to be much better. Those are numbers that are happening in a period when we don't sell much. Most of our sales come in the second half of the year when the rains come. With those words, thank you very much for coming. We do appreciate the opportunity to speak to our shareholders once in a while and our bankers so that we can keep them updated. If you can join us for a drink and a bite. Thank you.
Nhasi tanga tiri kuRatray Arnold Research Station uko kwatanga tichiona mbeu dzakasiyana dzinouchikwa nemazvo nekambani yeSidco kuti imi mutande nzara. Tanga tiri kuona chibage, tanga tiri kuona soya beans, tanga tiri kuona mbesa dzemuriwo, taona nzungu, tikaona mupunga pamwe chete nembeu idzi dzetsanga diki traditional grains. Tinosikwanisa kunge tichive nevarimi vakawanda, asi gore rino nekuda kwedenda reCovid takangove nevarimi vashomanana. Panguva ino ngatichinzwai kubva kuvarimi vanga vari pamutambo uno wanhasi, varimi vendima doko, macommunal farmers, nevarimi vendima dzakataramuka, macommercial farmers, kuti vaona sei mutambo wezuva ranhasi.
Ndafara chaizvo nezvataona panapa. Taona mavarieties akasiyana-siyana, mamwe atiri kurima, mamwe acho asati apinda musystem. Tafara chaizvo nebasa rekuitwa neSidco, ende dai varamba vachiita research yavo, kurima kwedu isusu kurambe kuchienderera mberi.
Tadzidza zvakawanda maererano nekuziva kusarudza mbeu yekurima. maisiro efertilizer nekuziva kuchengetedza mbeu.
Nhasi tadzidza zvakawanda mavarieties esidco ese. Ndichikurudzirawo varimi vese kuti dai zvaigona vatenga mbeu yesidco. Ndokuti mbeu
tinoda kukurudzira vatenge kuti mutenge mbeu yesidco. Kune mbeu yakanaka chaizvo kusidco, kune guru kusidco. Ndadzidza kuti chakakosha pakurima kwatiri kuita kubvisa sora mumunda kuitira kuti mbeu dzedu dziite zvakanaka. Zvidzidzo zvatadzidza pano zvakakosha chaizvo. Dai varamba vachingotisimudzira nokutitora vachiuya kutiratidza tichiramba tichidzidza.
Sidiko ndiwo musha wegowo guru. Sidiko muriga dzose.